Hello all, welcome to the Daily Horizon View, and the date today is the 21st of the 6th, 2019, a lovely Friday. Tomorrow's a Saturday, day off for everybody. We're looking at the ASX Exchange Traded Funds. We're focusing on the top fives. Our spotlight today is IOO, which is the iShares Global 100 ETF. Stick around for that one. It's quite interesting, well worth the wait. We are here to crack your financial sky. We want to give you information and demystify the world of finances. Okay guys, let's crack on through the top 5 percentage rises. Today we saw Triple O, DIV, ETPMPM, MNRS, UBE. So the top percentage riser today was Triple O, which is the BetaShares Crude Oil Index ETF. That's currency hedged and synthetic. I reviewed this one previously, so if you want to have a look at that one, go back through the videos and have a geezer there. Market cap of roughly $20 million. It'll pay out a small dividend of 1.48%. We saw a rise today of 3.85%, equates to 58 cents rise. Volume of 46,500 shares traded. Let's have a look at the top 5 percentage falls. What we saw today was QR, HACK, GEAR, IKO, and ACDC. So QR is ETFs, S&P Biotech ETF, and that tracks the S&P Biotechnology Sector Industry Index. Quite a small ETF, that one, of just over $5 million. We saw a percentage fall today of 3.65%, which equated to roughly $2.03. Very low volume, as this is a small ETF. The total volume was 84. Okay, the top dollar rises today. We saw a rise from ETPMPM, IHCB, IHEB, DIV, and IHHY. So ETPMPM is the ETF's physical precious metal basket. That ETF is backed up by physical allocation of precious metals. That's held in the HSBC Bank in America. Quite a small ETF, this one, about $7 million market cap. We saw a rise today of $3.27, which equates to 2.16% on a relatively low volume of 106 shares traded. Top $5 falls, we saw SPY, QR, IJH, IKO, and IVV. So SPY is the State Street Spider S&P 500 ETF trust, and as it says, it tracks the S&P 500 index. This is a relatively small ETF in Australia. This has a market cap of $31 million. You get a small dividend yield here of 1.76%. We saw a fall of $3.21, which equates to 0.75% on a pretty low volume of 62 shares traded. Top 5 number of trades. Today we saw VAS, STW, VAP, IVV, and VGS. So these are all in the group of the top 20 ETFs traded in Australia, the top largest ones anyway, 20 top largest ones. So VAS is the Vanguard Australia Share Index ETF, and that one, for those who don't know, tracks the S&P ASX 300. It's a little bit different to most. That one has a market cap of $3.5 billion. You'll get a healthy dividend yield of 4.45%. It's got a reasonable Morningstar rating of bronze. So today we saw a reasonable number of trades of 290. We saw a loss in the share price of 48 cents, which equates to 56%. Sorry, 0.56%. If I can read those damn numbers properly. Moving on. Top 5 for volume, we can see Fuel, Asia, IFRA, and AAA. Followed by RBTZ. So Fuel, which is the BlackRock Global Energy Companies ETF, currency hedge, tracks the NASDAQ X Australia Energy Index, sort of smallish to medium ETF, this one, $33 million market cap, pays a smallish dividend of roughly 2.92%. Volume today, we saw 207,600 shares traded. On the upside, we saw a gain in the share price of 9 cents, which equated to 1.58%. Top 5 for value, we saw AAA, SDW, VAS, IVV, VAP. For those who watched the midweek show where I look over the previous week, they'll know that AAA has been getting quite a lot of inflows recently. Year to date, it's about $209 million inflows, so it's quite a popular ETF. So AAA is the BlackRock Australia High Interest Cash ETF that invests the cash in deposit accounts in Australia. With banks such as ANZ, CBA, and NAB. This one has a market cap of $1.4 billion and growing quite rapidly. Dividend yield, or if you're looking to replace your bank interest, you'll get 2.03% roughly. Morningstar has a rating of neutral on this one, so it's neither negative or positive, so might be something to look at if you're interested. We saw a value of the trade today of $7.6 million. On the upside, we saw a increase in the share price of 1 cent, which equates to 0.02%. Okay, let's shine the light on a ETF star, I suppose. This is a pretty good ETF. This is IOO, which is iShares Global 100 ETF. So our investment objective for this ETF, so the fund tracks the investment results of the index composed of 100 large capitalization global equities. So the index, the S&P Global 100, is designed to measure the performance of 100 multinational companies, so blue chip companies with major importance in the global equity market, so effectively the 100 biggest companies on the market. So why would we bother? It gives you exposure to a broad range of large international companies in developed and emerging markets, predominantly developed though. Access to 100 of the best global stocks in a single fund. Used to diversify international and seek long-term growth opportunities in your portfolio. So we had a net asset value yesterday of 71.72, closed out today actually just below that at 71.36. Forgot to update that part. Market cap of $1.6 billion, so it's one of the bigger ETFs. Management cost of 0.4%, not too bad, but this is a cross listing, so in my opinion, the cross listings should be a little bit cheaper. That's neither here nor there. So semi-annually for your distributions in January and July, Current dividend yield's about 2.07%. So as advertised in the packet, IOO tracks the largest 100 companies in the world. It focuses mainly on the United States with roughly 64% of the holdings coming from that country, mainly because the biggest companies are in the United States. So therefore, that's why that percentage is like that. So the top holdings include Microsoft, Apple, Amazon, Nestle, Samsung. We'll have a look at the top 10 on the next slide. So including IOO in your portfolio could be a good move because the companies are all great profit generating giants. The companies have earned their place in the top of the world's markets due to their long track records of high performance. So having this one in typically builds in a little bit of safety, in my opinion, because they're the best of the best, 100 best companies in the world. But also, as you're doing your research, have a look at IWLD, QLTW, and also ETHI, as they might be an alternative to IOO. Have a look here. So, if you'd invested back in 2007 or early 2008, you can see kind of what's happened to your cash there. So you would have made it sort of be definitely on the up anyway. Had to suffer through the global financial crisis. As you can see, the graph goes down in 2008 and just starts to come back up to the mid 2013 there. So you definitely, it's not a bad ETF from what I can see here on this graph anyway. So as mentioned before, Microsoft, Apple, Amazon. So you got J&J there, JP Morgan, biggest bank in America, Exxon, if you like oil, so Nestle, Alphabet, and P&G. So all 9 of the top 10 stocks there are US based. So Morningstar also gives this ETF a bronze rating, so that's pretty good in the scheme of things. So obviously not gold or silver, but bronze, so it's a pretty good performer, and they seem to like it. Who am I to say otherwise? But yeah, if you're looking for a diversified but concentrated type of ETF, which I think this is diversified but also concentrated because you only got 100 companies in it, this is probably a good option. I don't mind this one at all. But as always, make sure you're doing your research. Hi guys, yes, this is our little standard disclaimer. I do not know your personal circumstances, and this is not financial advice. I'm not trying to promote any particular thing here. It's educational and just showing you guys what's out there and what the possibilities are. So please take that into consideration. My mission is to crack your financial sky by demystifying the world of finances. We're here to give you information so you guys can do that. Give me a thumbs up, hit the subscribe, smash the bell so you know when all the videos are coming. Hopefully we're helping out with the information we're providing and at least giving you guys a little bit of encouragement to go out and have a look and take charge of your own financial world. Ciao.